What's up, guys? It's KJ here with SimBull Sports doing another tutorial. This one's on the price to win ratio that you'll find on SimBull and also relating that to the price to earnings ratio that you find in the business world. First things first, we are running a promotion right now for a free t-shirt. If you like this video, if you share this video, you earn virtual tickets that will be entered into a drawing that you can win this t-shirt that I'm actually wearing right now. So if you like the t-shirt, if you like the video, like, share, and start getting tickets into this contest. So the price to win ratio is just like it sounds. You're comparing a team's stock price, to the number of wins that they have. So the price to win ratio indicates the dollar amount an investor can expect to invest in a team in order to receive one win from that team. So if you think about that, a high price to win ratio can be in a team that is overvalued. You have to pay a lot for not a lot of wins, which you don't want to do. Or that investors are really excited about the future of that team. They think that the price compared to how many wins they're going to get in the future is not a lot. So it could indicate that a team is, that investors are really bullish on the future of a team. So a simple example: the Seattle Seahawks are currently priced at $30 with 6 wins on the year. The Seahawks price to win ratio is 5, meaning investors are willing to pay $5 per Seahawks win. So the PW ratio is taken directly from the PE ratio in the business world, price to earnings ratio. So the PE ratio indicates the dollar amount an investor can expect to invest in a company to receive $1 of that company's earnings. So the formula is slightly changed: price divided by earnings per share. So a simple example: Target Corporation currently priced at $162 and has a PE ratio of 23.54, meaning investors are willing to pay $23.54 per $1 of Target's earnings per share. So now that we got the baseline of, okay, what is price-win ratio, what does the SimBull market look like right now? I think a great picture of that is the NFC West. So the NFC West has 3 of the top teams in the NFL right now: the Cardinals, Seahawks, and the Rams. So the Seahawks are currently leading the division at 6 wins. But what's really interesting is the price-to-win ratio of these different teams. So you can see, if you look at the price-to-win ratio, the Cardinals are actually higher than the Seahawks. So now, why might that be? Well, let's think about it. It could be because the Cardinals are overvalued. We talked about that. They're not as good as the Seahawks, so you have to pay more per win. Or alternatively, it could mean that investors are really excited about the future of the Cardinals. They have a young quarterback. They have a young head coach. They just signed DeAndre Hopkins. They're the best receiver in the NFL, and their defense is certainly young and could get a lot better. So it could be, maybe the Cardinals are slightly overvalued compared to the Seahawks. Or it could be investors really like Kyler Murray, their young quarterback, and they like the future of the Cardinals, and they think that they'll have extended growth, extended wins in the years to come. So it's really interesting. The Cardinals and the Rams have the same amount of wins. They're tied for second in the NFC West. But the investors are a lot more excited about the Cardinals in the future than they are the Rams, most likely because of, like I said, Kyler Murray and DeAndre Hopkins. I think another really interesting thing to look at right now is all the 3-win teams in the NFL. So like I said, these are all the teams that have 3 wins, and you can see their different prices and then their corresponding price-to-win ratio. So looking at this, you'd say investors they're a lot more excited about the Vikings and the Patriots than they are the Broncos and the Falcons. Well, why is that? The Patriots have been good for the last 20 years. So you think Bill Belichick's going to put together another winning team a lot sooner than the Panthers, the Broncos, or the Falcons are. Same thing with the Vikings. They have a good offense. They have Dalvin Cook. They have, an average Kirk Cousins. Their defense really let them down early in the season. Do you think Mike Zimmer, a defensive head coach who typically has one of the best defenses, is going to put together a winning defense in the next couple of years? Yeah. So I would say the investors seem to be really excited about the Vikings and Patriots compared to other 3-win teams. Now, the final thing I wanted to look at was what I call the young quarterbacks group. So these are all the teams that currently have young quarterbacks in the NFL. They have a different amount of wins, but just something to look at. So you can see, based on the price-to-win ratio, this last column, the price-to-win ratio, you can see that investors are really, really excited about the Chargers, Bengals, and Texans. Well, why is that? They have a young quarterback who seems to be a star. Justin Herbert has played really well this year. Joe Burrow played really well for a bad Bengals team. The Texans have 2 wins. Unfortunately, they traded away DeAndre Hopkins, but they fired Bill O'Brien, and they still have Deshaun Watson. So investors, either these teams are overvalued, or investors are looking at this young quarterbacking core and saying, hey, we really like what their potential is for the next 3 to 5 years. Now, one thing to be careful of This is not saying that the Bengals or the Chargers are more valuable than the Chiefs at the bottom. What that's saying is investors are really, really bullish about the amount of wins and the share price of these teams in the future. It's not saying the Chargers are better than the Chiefs, because clearly they're not. The Chiefs are valued at 31.50, the Chargers are at 24.50. But what it could be saying is investors are really excited about the Chargers' chances to win over the next 5 years, whereas the Chiefs might be more appropriately priced at 31.50. This ends the tutorial. Thank you guys for watching. Like, share, be entered in the contest to win a free T-shirt, and go ahead and get trading on SimBull with the information you just learned.